Most people today look at a bank as something ordinary, almost boring. A building with quiet lighting, glossy floors, maybe a polite clerk behind bulletproof glass. But the truth is, banking, the real idea of banking, was born in a world that was anything but quiet. It came from a place of chaos, ambition, political games, religious fear, and desperate innovation. That world was Renaissance Italy, and the first bankers weren't men in suits. They were merchants, gamblers, visionaries, and sometimes outright renegades. And perhaps the strangest part is that the modern financial system we rely on today, our mortgages, investments, credit, deposits, even the very idea of interest and liquidity, was shaped not by governments or economists, but by families fighting to survive in crowded medieval streets, where a single bad deal could destroy a dynasty. In this journey, we're stepping into Florence, Venice, and Genoa, but also into the minds of the people who accidentally built the foundations of modern finance. And as you listen, remember everything we take for granted today, every transfer you make, every card you swipe, every loan you receive, exists because centuries ago, a few Italian merchants refused to let money stay simple. To understand how banking began, you have to imagine Italy in the 1300s and 1400s. Not a united country, but a mosaic of city-states constantly competing for wealth and survival. Florence, Milan, Venice, Siena, Genoa. Tiny republics, each one with its own rulers, its own currency, its own ambitions. These cities weren't peaceful. They were loud, crowded, dangerous, and alive. Caravans entered their gates daily, filled with spices from the Middle East, wool from England, silver from Germany, silk from China. Coins from half the world jingled in the hands of merchants who didn't speak the same language, didn't trust each other, and didn't even agree on what those coins were worth. There were more than 200 different coin types circulating in Italy alone, all with different weights and metal contents. That's where the first spark came from. Not genius, not theory, just necessity, because a merchant in Florence couldn't function if he had to learn the purity and weight of every foreign coin in Europe. Someone had to step in, weigh the money, judge its value, exchange it safely, and handle payments without forcing merchants to carry heavy bags of gold along dangerous roads. That someone became the earliest banker. The word bank comes from the Italian banco, meaning bench, because the first bankers literally sat on wooden benches in crowded markets. They weighed coins, exchanged currencies, stored money, and, without fully realizing it, created the earliest form of financial trust. But trust was fragile. One mistake, one rumor, one political shift, and a banker could lose everything. When a banker failed, city officials would dramatically break his wooden bench in public. This is where we get the word bankrupt. Banco rotto, the broken bench. And trust me, in those days, a broken bench wasn't a small embarrassment. It could mark the end of a family name. But then something bigger happened. As Italian merchants grew wealthier, their ambitions expanded beyond simple exchanges. They began moving goods across Europe. They traveled to France, England, Flanders, the Ottoman Empire. But travel was dangerous. Roads were filled with bandits, pirates stalked the Mediterranean, and carrying physical gold was an invitation to be robbed. That's when the Italians invented something revolutionary. Money that traveled without physically moving. They created bills of exchange, paper promises that allowed a merchant in Florence to pay another merchant in London without touching a single coin. A merchant could deposit 100 florins in Florence, receive a letter saying he had credit, and then withdraw those 100 florins in London from a partner bank. No gold crossed borders. No bandit could steal it. And with that idea, banking expanded from a local business into an international network of invisible money. It was safer, faster, smarter, and it changed the world. But the real explosion of banking power came from a single family whose name would later echo through history, the Medici. Before they were patrons of art, before they financed Michelangelo, or influenced popes, they were innovators in finance. Giovanni di Bicci de' Medici took the simple tools of banking, currency exchange, deposits, bills of exchange, and turned them into a multi-city empire. The Medici perfected the idea of branching, one bank in Florence, another in Rome, one in Venice, one in Bruges, one in London. Each branch communicated through coded letters, carried on horseback across Europe, and these letters became the nervous system of a financial organism, stretching thousands of miles. Giovanni understood something no one else had mastered. Banking wasn't just about money, It was about information. Whoever had the fastest and most accurate information ruled the financial world. The Medici therefore invested in messengers, double-entry bookkeeping, and political alliances that secured their influence. They weren't just bankers. They were the architects of the first global financial network. But here's the twist. Banking in Renaissance Italy wasn't just commerce. It wasn't clean or simple. It was deeply entangled with religion and morality. The Catholic Church forbade usury, charging interest, because it was seen as exploiting time, which only God could control. Charging interest was a sin, and yet without interest, there was no profit in lending. So the Italians invented creative ways around the rules. They disguised interest as fees, penalties, currency exchange differences, anything but interest. This moral maze forced bankers to develop the psychological and strategic skills that still shape finance today. They learned to operate in shadows, to use language carefully, to hide risk behind complexity. And in doing so, they invented many tools that modern banks still use. While all of this was unfolding, something even more powerful was taking shape. Trust. Not trust in governments, not trust in religious authorities, but trust in private families. The Medici, the Bardi, the Peruzzi, the Strozzi, these names became stronger than currencies. In an age where kings defaulted on loans and currencies collapsed, merchants trusted Italian bankers more than they trusted their own rulers. That trust allowed the Medici to become the bankers of Europe. They financed popes, kings, and wars. They handled the accounts of the Vatican, which meant the church's money flowed through Medici hands. And with every transaction, their influence grew. But banking wasn't just about power, it was about fragility. Every early bank lived on the edge of collapse because loans were made to kings who might never repay. The Bardi and Peruzzi families learned this the hard way when King Edward III of England defaulted on massive loans they had extended to him for war. When he refused to pay, their banks collapsed almost overnight. Depositors lost everything. Trade froze. Florence's economy suffered for years. This disaster taught Italian bankers a lesson that still matters today. Too much exposure to one powerful debtor can destroy an entire financial system. Diversification wasn't a modern invention. It was born out of Renaissance panic. Meanwhile, Venice took a different path. Venice was a maritime republic obsessed with efficiency and control. Unlike Florence, which relied on private families, Venice built its own proto-central bank, the Banco di Rialto, in 1587. It didn't lend money. It simply held deposits and cleared payments, safely, reliably, publicly. It was a bank designed not for profit but for stability. And it worked. The Venetian banking model would become the ancestor of modern central banking, an institution designed to keep the financial system stable, even when private banks took risks. So by the 1500s, Italy had invented almost everything. Branches, bills of exchange, double-entry bookkeeping, international credit networks, early central banking, financial intelligence, interest disguised as fees, and sophisticated debt management. But as Italian innovation spread across Europe, other nations began to copy, evolve, and eventually surpass them. The Dutch Republic borrowed the Venetian ideas and built the Amsterdam Wissel Bank, which became the safest bank in the world. England later learned from the Dutch and created the Bank of England. And as these powerful nations grew into empires, Italy's city-states gradually lost their dominance. But the foundations remained Italian. Every bank statement, every international transfer, every loan contract carries the fingerprints of men who sat on wooden benches in crowded medieval markets. What makes this story relevant today is not nostalgia, it's the pattern. The same forces that shaped Renaissance banking still shape modern finance. Risk, trust, fear, innovation, political pressure, and the eternal struggle to make money move faster than danger. When you deposit money today, you assume it's safe. But in Florence, people once believed the same, until one king changed his mind and a dynasty collapsed. When governments promised stability, we believed them. But the Venetians didn't trust promises. They built institutions strong enough to survive broken ones. And when we look at financial crises around the world, from 2008 to recent bank runs, we see the same problems that haunted medieval Italy. Over-leveraged institutions, fragile trust, political influence, and the illusion that stability is permanent. In the end, banking wasn't invented by theorists or governments. It was shaped by ordinary merchants who needed safer ways to move money, by ambitious families who built networks across continents, and by crises that forced innovation. It was born in a world of uncertainty, and that uncertainty has never gone away. As you watch the system today, its complexity, its speed, its fragility, remember that its roots lie in wooden benches, handwritten letters, and men who risked everything on trust alone. And if you pay attention closely, you'll notice that the world we live in isn't as modern as it seems. It's just a more polished version of Renaissance Italy, with the same dangers hiding beneath a different surface. This is the story of how banking began, and it's a reminder that every financial system, no matter how advanced, stands on the same fragile foundation: trust and the constant effort to keep it alive.